Okay, let me get all these stupid notifications off my charts here. All right, evening everybody. I wanted to quickly go over what I found on IPDA this morning. So this was this morning, okay? You can see here, that was my IPDA line right up here. This is why it's important to draw them in when you first see them, because this range could potentially change later on. Like that was the range this morning when I was looking at it. This is now the new range because price went down. So what you're going to do, this is on oil. So last night and early this morning, I drew up the IPDA range. That was the high line. This was the lower line. That was my midline, the IPDA mid. Okay. This line here was the IPDA mid of these levels here on the daily. So this is the IPDA lookbacks, and they happen to be nested all up here. Now that's changed because prices dropped now, but earlier they were kind of all nested together. That's just an extra confluence. It doesn't really matter, honestly. This IPDA, this indicator right here, that's the one you care about. That's the one you need. I'm sorry, this IPDA operating range. That's the one that you care about. Without that, you're not going to be able to see anything. So that's the one I care about. I don't care about anything else but this right here. So what I noticed is that price had fallen and then flushed down and was at this level here in the evening. And it had come back and retraced down to this level here. So my projection was that we were going to go up. So later on in the morning, this is about 3 o'clock in the morning here, I noticed that we tried to come out of this level. We couldn't quite make it down because this was at the time the nested IPDA range at this level here on the 20, 40, 60 IPDAs. We'd come back down here and held this double bottom, so I anticipated price finally breaking through here. So I actually went long, just on a paper account, I went long and anticipated price to come back up to this fair value gap right at the midline. But it didn't. I was wrong. Price had failed it and was down here. Now by this time, by the time I noticed that I had failed, this was down like probably 20 ticks or something like that. But then price came back up into it. I was able to close at it, probably break even. And then when I seen that it had failed it a second time, I went ahead and took it short. Now, I didn't know how further down price was going to go, but when I noticed that at least I was able to reclaim my level right here, and I was at the break-even point, I went long. So I finally, price was just able to pull back enough for me to be able to just be like 9 or 10 ticks down, and then I went long down here. This was a quad rotation setup right here on the 15-minute chart, and I noticed we had a big quad setting right here, and I actually logged into the 2-minute chart on our algos, and I pulled up CL, and then I just took that trade. And I think at the end of the day, I think I posted I was up like about 39, 40 ticks or something like that, because I went, I took it short, made some money there, and then I went back long again. So I just, when you're expecting something to happen and it doesn't, it's okay to be wrong. And I just got lucky and price reverted back up into this lower level here during this candle. And I said, yeah, I went ahead and just took it. And I happened to notice that it had rejected this. This is my original order block that I had noticed here. And when I seen that it rejected this order block, I went ahead and just shorted it and just took, 40 ticks. It's really all I was looking for, because if I'm wrong and I expected it to go long, and if it would have confirmed and broke out, we had a really good long move to get back up into this midline and fair value gap. But because it didn't do that, I didn't know how much further down it was going to go. So I'm just happy to take 40 ticks and be out of it, But I got in heavy, like I think 4 contracts, and I took it short and just targeted 40 ticks, and then I was happy with that. And then I just happened to be able to catch the long setup again, and it went just straight up for a second. After it finally went to this extreme level, I was targeting this level here when I was in the trade on the 2-minute chart. So when I seen price had gotten down to this level here, I just took my 40 ticks and closed the trade, and then I went back in long again when I seen this rotation set up here in the 15-minute chart, and then back in the 2-minute chart, it looked really good too. I was hoping that oil would finally break up above this order block here. That's what I'm hoping that it's going to do eventually, because we did reclaim this original midline. This is the current IPDA low range, and this is now your current IPDA range right here. This is your high, this is your midline, this is your low. So now we got to forget about this, but I'm going to leave it marked up because it's a possibility we could break out of this range. But okay, let's not worry about that right now. That was then, this is now. So let's go ahead and draw up our current range. So I'm going to go here, and this is my IPDA upper level. So I'm just going to put in IPDA upper, and then I'm going to draw the low end, because again, this level changes as price changes, and I want to be able to just know this is where price is at. And we're going to change this to green, and then we're going to mark out the midline, because we're right smack at midline right here. So this is the midline. All right, so now we're marked out. So now we're trying to find out, these are our quadrants. This is the order block that we're still kind of trending against. So I'm going to go ahead and consider this valid still, because we did mitigate it. Really, it should probably be gone, but I like holding on to some of my levels like this because it had held it very firmly here. Finally, it had failed it and price had fallen. And then it has been working as a rejection point for now. So I'm going to leave this because there's obviously still some orders here that price can't get through. So what I'm looking to happen now at this point, let me change this color here to orange. So I have orange as my mid, red as the upper, green as the lower. I just simply, put the line over them because, again, this may change as price changes. So what we're looking now is that we've got this huge range up here we're trying to get past, and we have the range down here we're trying to get past. So pretty much as far as oil is concerned, we're in a holding pattern until it breaks through this level and goes up. I'll take a trade going up. But at this point in time, it looks like it's just going to the downside. So like there might be an opportunity to you to go short because we have failed this now a second time, this order block. We're failing the midpoint. So we're at least can potentially target this down here. Again, this is a 15-minute time frame. So potentially, this is, a good 10 ticks right here, and on oil, that's not too bad. Got to remember, this is CL. So there's a lot there. To get a 40 tick move in CL, that's the biggest range that you can have for the day. So to be able to get, stopped out for 9-10 ticks and then get a 40 tick short and then another 40 tick long, that's pretty much one of the biggest candles that trade throughout the day. So if you can grab, even half of that, you're doing pretty good. But okay, my point of how I trade this is, what's important with price is that you know where price is failing from or where it's going to, okay? So right now we know that there's liquidity here, so potentially price could come here. This is just sell side liquidity right here. This is the lower part of the range. So we just failed this order block. We just failed this level here. It manipulated up and then pushed down. So that was a good, I'm always like looking for these manipulation levels. That I like out of anything, especially on a 15-minute chart. You see this wick right here, how it wicked up in here real aggressively. It did take this liquidity here. So that is a perfect time to short, and it shorted all the way down just to that bottom range in one 15-minute candle. That was a killer trade if you can anticipate that. And we had it again here pretty much. We had a wick, a manipulation above this liquidity here, and now are going to the downside. So I would look and speculate that there may be some trade opportunities to the downside on the 2-minute time frame trading the algo. I look for an alignment on the 2-minute chart on oil. So these are some of the things that I might look at. Now, why won't I take that trade right this very second? Are the stochastics. I want to see these stochastics start to roll and feel, because right now on the 60 stochastics, we're going to the upside. We're finally at the midline, but we're slightly pointed up. So I want to see this fail the 50% line, and then I'd be confident taking a short. So that's how I always qualify my trades. Even on the 15-minute time frame, this is still going to tell you a lot. This is still going to tell you what to look for. Like this was a great opportunity when price pulled back down here aggressively, but we had a quad signal to go long here. Absolutely, take that thing long. You are down in the middle of nowhere. Price is undiscovered. We were looking at potentially targeting this liquidity down here, but we didn't. But the stochastics on a 15-minute time frame is much more powerful than it is on a 2-minute time frame. So it's important to have this as a qualifier. Stochastics always qualifies my trades. And we identified a good quad rotation down here, and we're identifying one here potentially. I would like to see this start to roll to the downside and break the 50% level. But yeah, there's probably going to be a shorting opportunity because as price does break down, this will actually break down as well too. But if I had to say, am I going to go long or short? This is more to the short side than it is to the upside. And I really wouldn't be interested in taking a trade unless we hold this level very confidently here to go back up again and we get a rotation from down here to the upside. So that's important to know too. If price were to come down here, before I would take the trade up, I would want to see the 60 come all the way down to the oversold area and then break back above here, because I'm not going to take a long if the stochastics are around this area right here, because it's already overextended for me in my opinion. I would much rather take it when it came down here to go to the upside and then just get out of the trade when the 9 and the 14 get to the oversold level. That's my exit signal right there, and that hit it perfectly. As soon as we tap that upper level, time to get out. We're probably not going to go any further. At least we're going to expect a pullback, and that was a very aggressive pullback, so that was good timing to get out of that trade there. So I know that I talk really quickly with IPDA. I realize there is so much to learn and understand about it. Some people asked, do I have an indicator that identifies fair value gaps? Absolutely not. And you don't need one either. All you're really needing to do is identify the first inefficiency at the lower level, the first inefficiency at the upper level that just happened to be an order block. We had a big push up, the first down close candle, that is an order block. We had retested it and then failed it. So that's a very strong level to price would be attracted to if we start breaking above things. Okay, we had some kind of conflictions here as we were getting into the 50% level right here. So, all right, this was at the time the mid level. So this created a really good fair value gap. The first fair value gap at a major level. The 50% level is a major level. The zero line is a major level right here. So at the time, this was our midline down here, don't forget. So this was the original midline when we were trading this. So this just happened to be a fair value gap right here. Or no, this may have been an order block. Yes. Let me see here. Let me log in here. Yep, this is the first up close candle from this big downward move. So that created a really good order block, and price respected it quite well. And it did hold here technically. We did not close below this at the time. So that would have been a beautiful trade, both short and to the long side, if you wanted to take that. We finally did mitigate this, but then now the reason why I'm keeping it is because price has respected it twice now. It wicked into it here, it wicked into it here. So there's clearly enough orders right here that it's holding price to the downside. So that's why I'm just looking for the first inefficiency. I don't care if it's a fair value gap or an order block on the lower level, the upper level, and the mid level. That are the areas that I would look for an inefficiency just to give myself a target. We had a big reaction here. So price is clearly going to respect this and be drawn to this if we do finally break out of it and go back up into the old mid-level here. I would look for this to still hold. I would still consider this a valid fair value gap until we mitigate it, until we break through it and potentially test back into it to then go long. I'm holding this level. There's a lot of solid orders here before it eventually failed, and just either news or some catalyst just forced price to come all the way to the downside. But we're at such an extreme range to the downside, I really do expect to see some upside activity, but we need a catalyst now. Being with oil, it's very differently. It trades differently. So we can get a news catalyst to trade this to the upside. That's really what I'd be looking for. Again, if you were to take a quick trade, you could probably jump in the 2-minute time frame and catch some killer trades to the downside. You're probably safe going to the downside because we did fail the midline. So I would be comfortable taking a short to this level right here. That's still a good trade. There's still room to go. There's probably a couple candles worth to the downside to get these 10 ticks. And if you jump into it with a couple contracts, that's like a $500 trade right there, just to the downside. So I'd be comfortable with that. If I know that there's a couple of 15-minute candles that I still have that's got room to go to the downside, and we've just failed a level, I would be comfortable taking these trades short versus trying to take a trade long. I would want price to get here and have the stochastics rebalance to the oversold area to then look for a long at that point in time. So I hope some of this makes sense. I realize it's a lot to throw at everybody at one time. There's a lot there, but this is just ways that I'm trying to find that our algo and the alignment and our stochastics, this just creates a bigger picture. If you don't know where price is at, you've no business being in the algo because you have no idea what we're doing here. You don't know what's going on here in the IPDA spectrum right here. You don't know what's happening right here. So this is our 15-minute IPD for NASDAQ right now. So we held this lower level. We wicked down like crazy just recently. Look at how that came and wicked all the way up, all the way down. But it held this major inefficiency to the downside. We still have a valid IPDA range. We have not moved it. This order block, it's the first up close candle from the major down movement. This is very solid. We held it here. We could have taken the trade. If you would have seen this wick right here, you could have taken it back to the upside and just done very well with it. But right now, this is an indecision candle. So to me, what I kind of look for until price breaks above this or below this, this is an inside bars, typically what this wick is now creating. So we can either still trade this because we're at the midline and we're holding the midline. We're kind of holding this small fair value gap here a little bit. We did mitigate it here, but then we came back down and then rebalanced it again and held it here to the downside until price got oversold and decided to turn around. But then we held it again here a second time. So price just doesn't quite know what it wants to do here at this level here. But this fair value gap is right on the midline. So that's a very strong order. It respected it very well here. That was the trade yesterday that we took in the morning. I'm sorry, this is a 9:30 trade right here. That was just such a solid trade. That's why I knew I had such conviction, because we had been trending upwards during the Asia session. London finally had us flush to the downside, but we held this here so aggressively right here. This level held and price was respecting it. And as soon as I seen this big, again, indecision wick candle, I even drew the upper and lower levels right here. But as soon as I seen this big wicky candle, but it did not, the body didn't close below this fair value gap. And then the very next candle was bullish. It pulled back a little bit, but then just immediately turned bullish. We went and took this trade long, and it just launched all the way back up to the upper level right here. So that was just such a beautiful trade. This was such an absolute beautiful trade. I was able to close 3 funded accounts today, get them in the profit target. I did $600 in one funded account, $500 in another, and $400 or $300 in a third funded account today, and got 3 of them over the $52,000 mark. They're all about 52.5 range, 52.4 range. So to get 3 funded accounts over the profit target, now I'm just going to trade some micros for 3 or 4 days, get my 8 trading days in, and then get some payouts done. But you seen later on during the day, though, we aggressively came up here, and during the lunchtime, this is an important time frame. During lunch, nothing really happens, and we tried wicking and taking it, wicking and taking it. So this was very powerful. This, I think, was an order block, yes, was very, very respected. I think this was a nested IPDA is what this yellow line happened to be at the time. I don't know why I drew it yellow. It just is. But you could see that when you tried to get it, failed it, tried to get it, failed it, tried to get it, failed it. So you could have taken this short any time and been confident that we probably weren't going to break above this level. And then eventually you're going to be in that trade and it's just going to flush and you're going to catch some of this. But even if you didn't catch this, the stochastics are on your side. We had a quad rotation to the downside. You could have gotten in anywhere here in the 2-minute chart and taken a short when you've seen a little bit of a pullback and then taken it short. You could have gotten into it here, and I would have stopped right here. I would not have thought that it would have gone through here. But when you seen this did fail eventually with displacement, that's important. If it just fell with a bunch of tiny little candles, I wouldn't count on that move. But because it finally failed it with some displacement, a big solid bearish candle, it came back up traded up into this inefficiency, respected it, now inverted this fair value gap, because at this point now it inverted to the downside. So now it's a bearish inverted fair value gap. You could have taken this short, targeting this original inefficiency at the bottom. And why is that important? Because it's the first inefficiency at the bottom IPDA range. That's why it's important to mark out and the first inefficiency at the bottom, the one at the middle, and then at the upper end range. So right now we don't know what price is going to do. Probably looking to hopefully break this midline finally. If we can break this midline, we could probably take this to the upper end of the range. And of course, there's lots and lots and lots of liquidity. So we're going to go and send this over because that's an important level. I would like to see price come to here, but this is the draw. What I'm talking about is this is the draw. If we finally break this fair value gap and hopefully trade back into it, you could count that you're going to get a very big bullish push up, and this is the draw. This is where you can potentially go to. So we know that if price finally breaks through here, comes back and retests, you could count on this being a big move. The draw is here. The confirmation is going to be here. So that's what I'm looking for to happen during either the overnight session or London or the open. So this just gives us a roadmap of what is possible to happen throughout the rest of the evening and the rest of tomorrow. All this does is tell us where price is at, where price might go, and then jump in the algo when you get a sense of a failure or a draw in liquidity and take those trades. Sorry to say that 3 or 4 times, but it's just important for me to get across to you. That's what I look for when I have my IPD ranges. That's why I think they are so important to do that, to use stochastics to qualify your 2-minute algorithm changes, your trades. Look for some alignment signals, because if you know that, like on oil, we're kind of bearish right now, okay, so any alignment on oil to the downside, you know you've got a little bit of room to trade here, and we're probably bearish. On NQ, we're probably bullish right now. I would be cautious taking a trade because this is a very significant level. I would want to see this get broken through with displacement, traded back into, and that could just be a quick wick down on the next candle before it just blast off to the upside. So it doesn't have to like gradually trade and then gradually trade down. It could, but more than likely it's going to just displace up. The very next candle is going to wick down and then just shoot back to the upside. That could happen in 2 or 3 candles. That could happen in 15 candles. You don't know that. But now you know what might happen. We know this level might fail, and now you've got room to the downside. If this level doesn't get broken through with displacement, and maybe it like wicks up but quickly reverts back down, and the next candle would be bearish. Once we break this level here, I would be bearish to the downside, targeting this liquidity down here now. So if, then that is all about what trading is. If price breaks above this fair value gap, it would go to the upside. If not, then price would fail this fair value gap and go to the downside. If, then that. Hope this helps, guys. Have a great night.